Welcome back to Wally Trades, traders. I am thrilled to see so many traders are watching this video, ready to dive into one of the most high-impact periods of the trading day. Whether you trade stocks, forex, or index futures, we all know that the opening bell brings a massive wave of volatility and overnight order flow. It can be chaotic, but buried inside that chaos is a highly predictable, repeatable pattern. Today, we are focusing on mastering a cornerstone day trading technique: the 5-minute opening range breakout strategy. In this session, we will break down exactly what A setup looks like. We will look at how to define our opening boundaries, establish strict entry triggers, and build bulletproof risk management into the very first candle of the day. By the end of this video, I hope you will learn and know exactly how this strategy works, as well as how to execute your first trade using this method. Why the 5-minute time frame? While some traders prefer waiting for 15 or 30 minutes to filter out noise, the 5-minute chart strikes the perfect balance for intraday scalp setups and catching early momentum. The core philosophy is straightforward. We wait for the first 5-minute candlestick of the session to close completely. This sets today's initial battle lines, our high and our low. The opening print is historically significant because data shows it frequently marks the high or low point for the entire trading session. When institutional buyers or retail momentum pushes the price past that initial 5-minute barrier with strong volume, it signals that one side has won the initial tug of war. Our goal is simply to catch that wave and ride the emerging trend. As you can see on the screen, this diagram illustrates the structural foundation of the 5-minute opening range breakout strategy. It is elegant, it is mathematical, and it removes the guesswork from the opening bell. Let's break down exactly what is happening here. The very third candlestick on the left represents the first 5 minutes of the trading day. During these 5 minutes, we do absolutely nothing but watch. We let the market process overnight news and absorb the initial wave of orders. Once that first 5-minute candle closes, its highest point and its lowest point become our lines in the sand. As marked on the chart, we project these horizontal lines forward to establish our opening range high and opening range low. These boundaries act as a spring-loaded trap. We are looking for the market to make a definitive statement. In this textbook bullish example, notice how a subsequent candle pushes fiercely past the opening high. This isn't just a random price movement. It is a breakout backed by momentum. The exact moment a candle breaks or closes above that high line is our buy trigger. It signals that buyers have completely overwhelmed the sellers at the morning's initial resistance line. But a great trader doesn't just look at where to get in. They look at where they are proven wrong. The foundation of the opening range breakout strategy relies on strict risk parameters. If the breakout fails and the price reverses, your stop loss is predetermined. Depending on the asset's volatility, your stop loss is placed either at the midpoint of the initial 5-minute range or just below the opening range low. If the price drops back into that zone, the setup is invalidated and we exit with a small, controlled loss. By relying on this visual framework, you are no longer chasing green and red bars blindly. You are trading a proven structural pattern with an explicit entry, a clear target, and a mathematically defined risk. Now that we have covered the theoretical blueprint, let's look at how this plays out in real time on a live chart. Imagine you are sitting at your desk, the market has just opened, and you are tracking a stock moving on fresh earnings catalyst. Look closely at the very first 5-minute candle on the left side of the chart. The market opens with sharp movement, establishing a clear high and a clear low within those first 5 minutes. The moment that candle closes, we immediately plot our key levels. In this specific scenario, the high point sits exactly at $308.99, marking our opening range resistance. The low point prints at $307, defining our opening range support. With these boundaries established, we wait. Following that initial 5 minutes, buyers take complete control. A strong green candlestick accelerates upward, slicing cleanly through our $308.99 resistance line. The moment that candle closes confidently above the boundary, our entry signal is confirmed, and we execute a long position. The exact millisecond our order triggers, we implement our risk boundaries. To keep our downside tight, we set a precise stop loss at $307, just beneath the swing structural low of the setup. This defines our maximum risk per trade. To maximize our yield, we project a predefined 1-to-2 risk-to-reward ratio upward. This defines our logical profit target at $312.97. As you follow the price path, the upward momentum carries forward smoothly, respecting our breakout zone, and turning previous resistance into clear structural support, before driving straight into our take-profit target for a clean, emotionless victory. In summary, the 5-minute opening range breakout isn't about chasing every sudden move. It's about waiting for that definitive candle close to confirm market direction. Protect your capital on the opposite side of the range, and let the math do the work. Now, your next step is action. Don't risk real money just yet. Take this strategy and backtest it over the last 20 trading days on a demo account. Remember, amateurs chase the market, but professionals wait for the breakout. That's all for today's video, traders. Thank you all for being here. If the strategy makes sense to you, and is going to help your trading, hit that like button. Subscribe for more setups. Don't forget to turn on notifications, so you never miss a market move. Click on the video popping up on your screen now to see my top trading tips. Let's get those pips by this week. Until next time, trade safe and stay disciplined.